investors, welcome to Proximo, the Value Stock Analyzer. Today we're going to cover Exela Technologies, XELA. I've wanted to cover Exela for a long time. I haven't because there's a little bit of a data issue when it comes to our data feed on Proximo. We'll take a look at that in a second, but it's not going to stop us from being able to analyze the health of the company. In this video, we'll do an analysis of the technicals, income, revenue, debt, and assets. And then at the end, I will give you a summary of my feelings on the company. So please stay tuned for the end of this video. And as always, please do give us a like and subscribe. Your subscriptions mean a lot to us. Please click that subscribe button so we can continue making videos like this for you. So what is Exela? If you're like me, you maybe hadn't heard of them until maybe more recently when their stock started to plummet. Let's take a quick look at the About page. Exela Technologies provides transaction processing solutions, enterprise information management, document management, digital business process services worldwide. The company operates through three segments: information and transaction processing solutions, ITPS, healthcare solutions, legal and loss prevention services. The ITPS segment provides lending solutions for mortgages and auto loans, banking solutions for clearing, anti-money laundering, sanctions, and interbank cross-border settlement, property and casualty insurance solutions for origination, enrollments, claims processing, benefits administration, communications. This continues to go on. They offer business solutions for other companies, a B2B business to business, and they are based in Irving, Texas. And Exela has 16,000 employees, which makes them a pretty large company. So coming back here to the fundamentals, we can see Exela is trading at 5 cents per share. If we take a quick look at the 1-year history, they were over $10 a year ago. If we actually look at 3/31 to today, they were trading, so March 31st, 2022, they were trading at $8.32, and they are down 99.45% to today. Market cap is $5.62 million. $5.62 million for a company that employs over 16,000. 16,000 is incredibly low. If we come down here to a year-over-year revenue growth, they do have revenues in the billions, $1.17 billion the year ending 2022. They will likely be reporting the year-end revenues for their fiscal 2023 very, very soon. But we can also see that revenue has been dropping just a little bit year over year. From 2019, 1.5 to 1.56 to 1.29 to 1.17. We see some negative growth there. Now, even though we do have negative revenue growth, that's not necessarily indicative of a bad performing company. However, when we look at their total net income, they are not profitable, and it looks like they maybe were profitable in 2017, but since 2018 they've posted nothing but negative earnings: minus 204 million, minus 162, minus 509, minus 178, and minus 142. They have not been profitable in the last 5 years, and it looks like they're struggling to make up ground on that ratio between total net income and total revenue. Now, if we take a look at the scorecard, let's take a quick look at some of the fundamentals here. Implied growth over actual growth. We're gonna have that not available. You need to be a profitable company to have this ratio filled out. Liabilities over assets. Now we say the sweet spot is somewhere between 0.3 and 0.6. Somewhere around 0.3 would mean that they're not very leveraged and they could maybe do a better job with debt. Anything over 0.6 we say is over leveraged and potentially means that they're into some debt trouble. Exela shows up at a 1.64, which is extraordinarily troubling. This signifies they have a lot of debt, especially compared to their assets. Not a whole ton else to see on the scorecard. I think assets are greater than market cap, and while we typically think of that as being a positive indicator, I would argue that it's not a very positive for Exela, considering their market cap is only $5 million. They are a fairly large company with 16,000 employees. they are very likely to have assets greater than market cap, and that's more of an indication of low stock price and low market cap as a result of some troubles recently. Revenue per employee is $70,000. That is also pretty low. When we think about revenue to employee, we think about, how much revenue is a company pulling in relative to how much they're paying each employee. I don't know what the average employee at XELA makes, but $70K is relatively low, I would say, from what we normally see here. This indicates to me that the margins for the business are incredibly low, and they're non-existent, as we saw. This is not a profitable company, so this is also not a very great indicator for us right now. If we come over to the balance sheet, I want to take a look at the current debt position. We'll take a look at it on a quarterly basis. Like I said, there are some data issues with Exela for some reason on Prosimo. We get our data from a third-party provider, and some of the data is a little inaccurate right now. So if you look at the last two quarters, you see this 516,000, 529,000. This should be 516 million, 529 million. So if we take a look at their current debt or total current liabilities, we can see that number has increased over the previous 7 quarters from $419 million to $516 million, while the cash position is also fluctuating quite a bit, 22 to 45, 45 to 146, and then down to 20, 38, 50. Again, this is 50 million and 10 million. The cash position is not from revenue. They don't have a positive net income. So this cash is coming from debt. So the only reason they have cash on hand is because they keep increasing their debt load, which is honestly just, again, not a great sign, at least short term for this one. If we come take a quick look at revenue, again, over a quarterly basis, we can see revenue is stagnant, if not shrinking. 7 quarters ago, we were at 300 million, then 293, 279, 294, 279, 266, 264 million as of the last reported quarter. Again, we'll get their Q4 results soon, and we'll get their annual results really soon. Revenue is shrinking, cash on hand is shrinking, debt is rising, net income is also rising. They did have their best quarter, it looks like, over the last 7 was minus 13 million. Their last quarter, minus 87 million. Again, this is just an error. Minus 87 million on lower revenue. Again, not a good sign. I'm not sure we need to look at the numbers much further. If we come over to Investor Place, they've been reporting on Exela for a little while. They posted this story just a couple days ago. Exela stock, a turnaround story or a dead end? The bullet points here: Exela Technologies cost-cutting measures won't likely lift the company out of its deep financial hole. Furthermore, Exela Technologies' proposed reverse share split is probably a sign of trouble. Investors shouldn't count on a turnaround happening anytime soon for Exela. Investor Place continues on to summarize at the end: Exela stock isn't worth the risk. I personally would agree with that statement, simply just based on the numbers. I don't know if Exela has any big innovation or productivity products coming out soon that could help the business, but simply just based on the numbers alone, there's not a very value-driven story here. Hope you found that helpful. Thank you for tuning in to Prosimo today. If you found this helpful, again, please give us a like and subscribe, and we will see you in the next video. Go find some value.